Greetings, great learners. My name is Mr. Simbi, and welcome to today's accounting lesson. In today's lesson, I'm going to introduce you to the Creditors, Allowances Journal. Did you know that when a supplier delivers bad quality goods to your business or to you individually, you can return the goods back to the supplier and claim an allowance on such goods? Here are the objectives for today's lesson. By the end of this lesson, you should be able to identify transactions that lead to creditors' allowances. The second one, you should be able to prepare the Creditors' Allowances Journal. And the next one, we should be able to post from the Creditors' Allowances Journal to the General Ledger. We should also be able to post to the Creditors' Ledger, and we should be able to prepare a creditors list. Now, after today's class, you should be able to prepare a trial balance. And lastly, you should be able to do the accounting equation on transactions that affect the Creditors' Allowances Journal. Now, at this moment, there is information that you already know. All right? By now, you should be able to prepare the Creditors' Journal. You should be able to post from the Creditors' Journal to the Creditors' Ledger, as well as create a creditors list. And then you should have an idea of the accounting equation. I have new words that I want to introduce to you today in today's class. Make sure you take this down as I introduce the new word to you. It is what we call a credit note. This is a source document, so the important part is source document. So a credit note is a source document issued by the supplier to the buyer when the buyer returns goods. Very important to note. And then nextly, I'm going to move now on to the definition. The definition of my Creditors' Allowances Journal. It is a journal in which the return of goods, very important here, the return of goods or a request for an allowance when an overcharge is recorded. In other words, if you order a particular type of good and then you receive the wrong type, and then in such an instance you can claim an allowance, then we can record it in what we call the Creditors' Allowances Journal. Now, we are going to move on to the reasons. What are some of the reasons that can lead to allowances? The business may return goods to the creditors for one of the following reasons. So I want you to take down the following reasons that I'm going to give to you. Number one, when the goods are not what was ordered. In other words, you ordered a particular type of goods, but then you receive a different type of goods. When the goods are damaged, or when the quality is incorrect, all right, that is, you received the wrong quality of goods. And then when the goods are faulty, especially on electrical goods, and when the order is incomplete, that is, you received only part of the goods, or when there is incorrect or damaged packaging. Now, these are some of the reasons why you may return the goods. But then I want to give you the last reason for an allowance. You can also claim an allowance when there is an overcharge. In other words, creditors' allowances will be considered when our business has been overcharged. Now, it is very important to note that in this case, we will ask the creditor to reduce the amount that appears on the invoice. All right? In the first instance, we were returning the goods. But in this case, we have been overcharged. So we then ask the creditor to reduce the amount that is appearing on the invoice. The goods will then not be returned in this particular case. The goods will not be physically returned. All right? So it is a situation whereby you have been charged more than what you were supposed to have been charged. Dear learners, I'm going to see you immediately after the short break.